we've started to see earnings reports coming in over in Kenya outside of the banking sector. What have your overall impressions been of these earnings reports?
Well, what's coming out clearly is that we're having high costs of operations. Most companies which have posted their half-yearly results indicate that they've been an increase in their cost of operations, and this has affected their bottom line.
Well, I want to look at specifically the communications arena, because that is an area we don't usually focus on. We had Kenya's Standard Group posting a 21% fall in pre-tax profit for the first half. It blamed a weaker local currency and then newsprint costs, as you've been highlighting as well. What did you make of the numbers there?
Truth be told, I think most companies are going through lean times as a result of the increase in our production operational costs. And for publishing companies, you just mentioned a Standard Group. They did talk about the high cost of newsprint, and their counterparts, that is the Nation Media Group, also did post a reduction in their profitability. And one of the reasons cited was the increased cost of the newsprint. So really, the high cost of the newsprint and other incidental costs is eating into their bottom lines.
Well, the company's growth prospects, of course, have a direct link to economic performance within the country. And if you look at it, I mean, they're being hit by a double whammy, because not only do consumers have less disposable income to actually consume products on the one hand, we've got companies, outside of the space on the other, with restricted budgets. And with that being the case, it's the marketing budgets and advertising spend that's often the first to go. So with that in mind, and with current reports of what expectations are for growth prospects in Kenya moving forward, what's your outlook for the communications firms moving forward?
Well, what it is that for sure, 2009 is one year that most of the communication companies will gladly wish away. I mean, you just talked about slashing of marketing budgets. And I mean, in any recession or whenever there is an economic slowdown, one of the first departments that suffers most is usually the marketing department, which basically has got implication as far as advertising revenues for most of the communication companies is concerned. So really, I'd still maintain a dim outlook as far as the performance of most communication companies is concerned.
What is interesting, having said what you have, is that Standard Group said that its revenue rose 5% as both circulation and advertising grew. So what is it doing differently in capturing some of the market share in this very difficult economic climate?
Well, one thing about the Standard Group is that it has a diversified product portfolio, and they've introduced quite a number of new products. And I bet the products which have been introduced have basically contributed to the increase in the turnover. So really, I think the way to go here is diversification and trying to tap into new markets.
Looking at the day ahead, Dickson, do you have your eye on anything specifically? Are you waiting for any movement from any specific stock?
Well, one thing for sure is that we did see the Nairobi Stock Exchange edge upwards, though marginally in the last trading session. I'd still maintain a positive outlook, though I'd also have guarded optimism. I think we've seen the economic stimulus program being implemented. Then apart from that, we've also seen the meteorological department announced that the country could be expecting between normal to above normal rainfalls. So this has created some sort of confidence, so it has restored some sort of confidence in the market. So expect that the market will continue rallying upwards, but though slowly.